Hello and welcome to the paid weekly recap for the week ending January 9th, excuse me. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence utilized in the predictive AI for dynamic market system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I urge you to read the characteristics and risks of standardized options available at the link highlighted. And if you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap for the week. So overall, the market was generally bullish, but to start with the bonds, they were choppy and going nowhere in the 10-year yield. And we had some bond news in general near the end of the week, talking about buying 30-year bonds, lowering interest rates for the long term, which is beneficial to mortgages. But for the 10-year side of things, nothing really changed. Front end of the curve showing higher yield as people look for economic expansion. Long end, a little bit lower interest rates as there's been bond buying programs. 10-year yield relatively unchanged, still stuck really between 4.1 and 4.2 now. The range has been 4 to 4.2. We've been struggling to get below 4.1% since the beginning of December. The market, as I mentioned, generally bullish week. Wednesday and Thursday, a bit of a pullback, minor dip with a close at all-time highs. Non-farm payrolls on Friday were good enough. The bond buying program, good enough. Everything looks good enough for the market to get into bull mode. And with that, we're starting to see greater participation and a little bit more clarity in terms of what sectors are going to be in focus for those looking for new investment theses for 2026. We had to get through a little bit of beginning of the year rotation, sector rotation, stock rotation. Overall, now the market is starting to take grips on a bull trend. Now, at the end of the day, every time we've seen these breakouts, we have seen pullbacks shortly after or some consolidation periods like we saw at the beginning of December. Before a pullback, before a new high, before a pullback, and now a new high. We will see if that pattern continues or if we can go into a grind higher bull market. And a lot of that seems to be likely driven by earnings, which start up this week. We've got a number out there. A lot of them are financials. We've also got stocks like Delta Airlines releasing earnings, and that can start to shift market tone as we look for economic indicators. Where we've seen a slower recovery here is in tech. Now, tech has found support at the 100-day moving average multiple times. To start to see a bull market, dips need to be bought at the 50 or 20-day moving average. We need to see a new all-time high. We haven't had that since October. Tech bull is crucial for a generally bullish market. That shows interest in growth, long-term, longer, bigger ideas versus dividend yield or other theses that the market has been focusing on. Now, as we start to focus on that growth and start to see that exuberance for the economy, that may also be an ultimate short-term top. But for now, that's been a lower participation rate as people have moved away from AI type focus and into a bit safer sectors and more sectors. And that can generally be viewed as a good thing, but the tech market does need to see a new all-time high to really feel confident in an overall bull market. Small caps are in a bull market now as we tested a new high on Thursday and pushed further on Friday. Financials generally look pretty good. Healthcare looks pretty good. Energies look good. A lot of different sectors looking generally good. We've had some fundamental news that has helped drive energy movement, everything going on in Venezuela. There's a lot of fundamentals out there, but generally they've been taken on the bull side, and that tends to give more confidence to the market on the whole and the buyers looking for opportunities to get long and stay long. If we see the normal trade pattern play out again, where sellers of the rally are rewarded in that they are able to buy the dip, well, then maybe we're not quite ready to get into that runaway bull market. But if those sellers are finally punished, which they have not been, that may set up more FOMO buying, fear of missing out, and a greater momentum to the upside in general, which creates a tailwind for a lot of stocks. And then finally, we have the VIX coming down to 14.5. The lows were made just before Christmas. We had a grind higher in the VIX as people started to hedge their portfolios, but then with non-farm payrolls and a delay in the tariff decision from the Supreme Court, the market started to take away a little bit of that fear. Leading up to earnings, oftentimes we see a little increased fear. We've seen a lot of chop in individual names, but the broad markets have generally looked pretty good. Now, speaking of that chop, we did not have any paid signals this week. The markets were just a bit too choppy. A lot of movement Monday that, basically was the move for the week in a lot of these stocks. Or a rally on Monday that was just offset by Tuesday. And that created too much chop to generally look for a put credit spread and a little bit higher implied volatility in those names that were moving that just didn't justify a long call entry. So that chop pulled us away from generally looking for new entries, removed some of the confidence of the AI signals, but we do expect to see new signals next week or in this upcoming week. Earnings again, back in focus. But now that we've gotten past non-farm payrolls, we've gotten past some of the early 2026 stock rotation, we are looking for some generally higher confidence signals from the AI models. At the same time, the live trading room has continued to perform well. So please beware of the potential here. If you have the time, join us on the live trading room. We talk through a lot of different stock options ideas. Morning bell goes from 9:15 to 10:15 Eastern, closing bell from 3 to 4. Please do join us, talk through any questions that you've got. And if you have questions outside of those normal hours and you'd like to reach out, I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. Thanks again, folks. Let's see what the market brings us in the week ahead and hopefully another exciting week for the market with some really interesting trading ideas. Thanks again.